everyone, welcome. Long time not seeing you guys. It's been a while since I provided a webinar. So today we're gonna go through MACD. It's quite a lengthy one, but anyway, if we don't manage to cover it in an hour, I have because I added a bonus section as well, so that will be, if we don't manage to cover that as well, it will be something for you to go through it when you have any free time and etc. Obviously, I'm here to help with anything you need. You can contact us in social media or via our webinar, our email address. Or just ask one of the support agents to help you, or let him know that you need something from me, you need the help, and etc. So, okay, according to my title, it's all about MACD today, mastering the MACD, actually. So, hopefully, this will be an informative session for you. If not, I would really appreciate the feedback, even if it's a bad one. Feedback is a feedback. It's only something positive, something that leaves areas for improvement. So, I have uploaded the slides. It's on the handout section. Okay, so feel free to download them. And yeah, before I go through, I would really like, as usual, your feedback, whether you can hear me loud and clear and see my screen as well. And yeah, so until I have a feedback from you regards to the audio, I will go through the admin as usual. So this material is provided to general marketing communication for information purposes only and does not constitute an independent investment research. Nothing in this communication contains or should it be considered as containing an investment advice or an investment recommendation or a solicitation for the purpose of buying or selling of any financial instrument. All information provided is gathered from reputable sources, and any information containing an indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledge that any investment in leveraged products is characterized by a certain degree of uncertainty, and that any investment in leveraged products is characterized by a certain degree of uncertainty, and that any investment in this nature involves a high level of risk for which the users are solely responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. Risk warning: trading leveraged products such as forex and derivatives may not be suitable for all investors as they carry a high degree of risk to your capital. Please ensure that you fully understand the risk involved, taking into account your investment objectives and level of experience before trading, and if necessary, seek independent advice. Please read the full risk disclosure. Everything is on our website, so go for it. Thank you for the feedback, Soran. Thank you very much. So we are good to go, actually. That's me. It's all about MACD, as I said, interpretation, what it is, interpretation, structure, combination with divergence, convergence as well. And the bonus part is a combination of MACD and Bollinger's. But yeah, I'm not so positive that we'll manage to cover that today. So it's something that you can go through, and if you have any questions, let me know. So just a very quick background, the history of MACD, let's say. By the way, I forgot to mention that as usual, this is recorded. So I understand that some of you might due to, I don't know, awful internet connection, or they are in between work, or traveling, etc. If you cannot stay until the very end, anyway, you're gonna receive an email with the recording in your inbox. Just always try to check your spam or junk folder sometimes, unfortunately. it goes automatically over there. So nonetheless, a bit of a history, as I said. So the MACD actually it has been developed by Gerald Appel, 1970s, back in the 1970s, okay? It wasn't like that from the very beginning, okay? It wasn't like that. It was just a line. So the bars were an addition that he did, that Thomas Ansprey did afterwards. So it was only the red line, the signal line. It was something that, yeah, as I said, Thomas Asprey added later on in 1986, as a means to anticipate MACD crossovers. So with this addition, we are having further signals. We can derive further signals from MACD, and I will explain later on. So it's an indicator, general MACD, guys, is an indicator of important moves, obviously in the underlying security. So the biggest benefit that MACD has is that it turns into two trend following indicators, moving average into a momentum oscillator. So it's a trend following a momentum indicators. It offers the best of both worlds. So it is a trend following indicator, but also a momentum oscillator. So the MACD, as I said, turns two trend following indicators, which is moving average, into a momentum oscillator by subtracting the longer moving average from the shorter moving average. So as a result, the MACD offers, as I said, the benefit of providing trend and momentum signals. So it's a trend indicator, but also a momentum oscillator. Just to simplify what I said and how the MACD works. First of all, it uses two moving averages, okay? Two. So the line that we see, the signal line that we see, okay, it's the merge, the merging of two moving averages. The same stands for the histogram as well. So we're gonna see in a bit the calculations behind it, but you will see from the calculations that in the calculations, what is used is moving averages. So we are having the MACD based on subtracting the longer moving average from the shorter moving average. And now we will see it in a bit. By the way, I forgot something significant. What MACD stands for? It's abbreviation. It's an abbreviation which of the moving average convergence divergence. So MACD, MACD, moving average convergence divergence. And it looks like that. So you can see that the lines, the bar graph, and the bars, the white bars, are fluctuating above and below the zero. So here is the zero, the neutral zone, and our job is to interpret this move. Because by interpreting and understanding these moves that MACD is having, we're gonna get signals in regards to reversal, convergence, divergence, bullish, bearish signals, and etc. So all these crossovers, central line crossovers, divergence that the MACD generates are signals that can be used in your trading. And because the MACD is unbounded, so if you see it's not like RSI that is from 0 to 100, let's say, with 20 and 80 to be key barriers. MACD is unbounded. There is no limit, neither to the negative area, neither to the positive area. And because it's unbounded, it is not particularly useful for identify overbought and oversold conditions, levels. That's why if you want to identify overbought and oversold levels as well, you need to combine it with something else, something such as Bollinger's or RSI or stochastics. Okay, so let's move on. We have already covered all these. It's a trend following indicator, it's a momentum indicator. So as a consequence, oops, sorry, based on that, we can spot and quantify the strength of the trend, the direction of the trend, but also how strong this trend is, and whether this trend is about to change, because as I said, it's a trend and a momentum indicator. So don't know how many of you are new in trading. I will say quickly because it's something fundamental. But if you don't understand, please interrupt me. Please stick in the question box whether you have any questions, and I will try to explain again. Just to be sure that we are all on the same side, I would like to clarify what momentum is, because I don't know the background other than Zoran, for example. I don't know the rest. So momentum, what we mean by momentum, guys? The strength, the energy of a trend. Okay, because if there is a strong momentum, so there is strong energy, the trend will last longer. If there is no energy, lack of energy, or detected energy, it means that the trend has doesn't have, it's a short-lived one. It might revert because there is not enough power to support it. Think it like that, okay? Energy, power, strength. Yeah, there are actually, yeah, something that I missed is that on the, okay, we're gonna see that right now okay, here is the calculation. I have skipped 2 slides, but I will be back, okay? Here is this calculation of MACD, okay? So there are 3 calculations at the back: MACD line, signal line, and MACD histogram. On the MACD, you can actually see only the MACD histogram and the signal line. You cannot see the MACD line, but that's fine because it's not needed. It's just needed for the calculation of signal line and histogram. You don't have to obviously worry about calculations. It's automatically done. It's just for understanding how the MACD works. So as you can see, is based on exponential moving average. Okay, so the reason for that is because, let me get back, is because an exponential moving average gives more weight to the most recent data. It's more sensitive to price movement. That's why the creator of MACD decided to use exponential moving averages for creating and composing, let's say, this indicator. So as I said earlier, subtraction of the short-term exponential moving average from the long-term one. Then for the signal line, we use by default, we have the 9-period exponential moving average of the MACD line, and then a histogram is the MACD line minus signal line. You don't have to know all these, okay? It's just for your own understanding. So basically, MACD line is the 12-day exponential, 12-period exponential moving average minus the 26. Closing prices are used, by the way, for these moving averages. So the difference between these two, between a fast and a slow moving average, okay, is what we have over here in MACD line. MACD line is the difference between a slow and a fast exponential moving average. The 9-day exponential moving average of the MACD line is plotted with the indicator to act as a signal line. So the red line that you can see, is the 9 period exponential moving average of the MACD line, of the calculation that has been done before. And this signal line is being used for identifying any trends. So this red line is called signal line. Okay. The histogram on the other part, it presents the difference between the MACD and its 9-day exponential moving average, okay, which is the signal line. So these bars that appear either below or above horizontal zero line, it tells you how much momentum a price move has. It helps you recognize when a trend is gaining strength and when it may be about to run out of steam. Okay, so I want you to completely skip the calculations, okay? If you feel that you have been confused, completely skip calculations, just stick on your, just write down or focus on the part that the signal line is the way the signal line interacts with the zero line. Give us trading signals. It give us, it identify for us turns, okay? While the histogram, the bars, okay? And whether they are above or below zero, whether they are above or below the signal line, whether they keep increasing, or whether they keep detacting, that show us the momentum. It shows us to understand, it helps us to understand and recognize when a trend is gaining strength or not. Okay? Okay. So. Actually, I'm gonna also share MT4. Just for the sake of understanding. Okay, what do we have over here? Sorry, my PC is a bit slow. Okay, I will put it just over here. Okay, so as we said, MACD is unbounded and fluctuating with the zero, up and down, etc. Just zoom out a bit just to see these fluctuations. You see, up, down, way down, way up, and etc. So this is what we need to understand. So first of all, let's agree that we know and we understand the zero line, right? The center line. This is the center line, the zero line otherwise, right? So So the MACD fluctuates above and below the zero line as the moving averages convergence, cross, and divergence. So you guys as traders, I believe you're traders to be here, you can look for signal line crossovers, center line crossovers, and divergence to generate signals. Because um, um, so why you need to check for this? Because if you identify your red line, your signal line, crossing above or below the zero line, that identifies a trend turn reversal. If you spot your MACD slowing down, so MACD histogram detecting, dropping, that identifies the momentum. The momentum is decreasing, and so on and so forth. So when your MACD histogram, the bars and the signal line, so both the bars and the signal line are above zero, like here, this means demand. So it means that bulls are in control. If your histogram and your signal line are both below zero and they drop, they keep dropping, okay? Even if they don't keep dropping, but they're well below zero without a sufficient recovery or something, that implies to supply. So more supply than demand. So selling pressure. Sellers are in control. Now, the next thing that you need to check, let's assume that we have checked where your histogram and your signal lines are. You need to check also, you need to, in order to interpret fully MACD, you need to check also, other than whether the lines are below or above the zero line, you need to check whether they cross each other, okay, or whether they don't agree with the overall trend, or whether there is a very sharp, dramatic rise or fall. We're gonna see all these one by one. So let's start. Let's start with the first one, which was the convergence. Remember, the name of MACD is an abbreviation of convergence and divergence of the two moving averages. So what we mean by convergence? Convergence is when the moving averages move towards each other, right? Okay, so what is the zero crossovers? Zero crossovers is the event that occurs when the MACD series changes sign. So that is when the MACD line crosses the signal line crosses the horizontal zero axis. So if MACD changes from positive to negative, this is a bearish signal. If the MACD changes from negative to positive, that's a bullish signal. So let's see. Can you see this? I think you can. So this, the fact that both lines, in MACD in general, but our histogram, our signal, our red line as well, both turn. They used to be positive, but they turn below zero. That is a bearish signal. While the cross from negative to positive, the turn that they have turned above zero, it's a bullish signal. Okay. Now that implies to when the MACD lines, both of them, the bars and the red line, cross above or below zero. Now we need to also have a look on how they interact each other. So when the MACD, and I'm referring to the bars, when the MACD, the histograph, falls below the signal line, this is also a bearish signal. Why is that? Let me show you an example. I'm gonna see them later on, but can you see here? We are actually in a positive territory. So our both lines are above zero. But at some point over here, the bars came below the signal line. See? And they keep moving lower, signal line moving lower, but they kept below it. So that also is a bearish signal. Okay? Because it shows that bulls have no longer the control, but bears have the control, and more and more more and more sellers enter in the market. Okay, so on the flip side, when MACD turns above the signal line, so here, for example, you see that, or here. So we were in a negative territory, but we had seen MACD bars to start crossing the signal line and move above it. That's also a bullish signal. And actually, the good thing about it is that it's in advance. It's in advance of the zero crossover. So it's an early signal. You get what I mean? It's an early signal. So that means that we can jump in the market, we can get into the market before actually confirming that the trend. So it's ahead of time. Now, wait, I need to go back. What else over here? What we have? So zero crossovers provide evidence of a change in the direction of the trend, but less confirmation of its momentum than a signal line crossover. So signal line presents the signal line crossovers present the momentum. Zero crossovers, however, confirm the direction. A trader should always wait for the confirmed cross above the signal line before entering a position in order to avoid getting faked out or entering into a position too early. So. Are we good so far? So look at this beauty, guys. Look at this beauty. Rising and rising and rising. So it was clear that we are in an uptrend. If you check the trend, the actual candlesticks, and you check your MACD as well, there was a rising momentum, rising bullish momentum. So more and more bulls were entering the market. You can see the histogram is above signal line, but sometimes it was clashing over here, but they kept moving away from zero, higher and higher from zero. You see, higher and higher and higher and higher and higher until we see this happening. Histogram started falling until it crossed the signal line. That was the very first sign that the trend is changing and we might have a reversal. Okay, so the fact that it continued lower, okay, both of them started pointing down, it was a potential entry point. I mean, if you combine it, so it was keep falling and falling and falling. The same stands for signal line. So if you by identifying some support and resistance levels, you could find find an appropriate entry point for your entry short. That was a clear indication that trend is changing, that the uptrend has over. We have a new trend with bears having less and less and less the control. So now on the flip side, again over here, can you see this here? The histogram found the support, and eventually they started moving higher, crossing above signal line. That was the very, very first indication that the downtrend is running out of steam. We've seen a bit of a sideways movement, but eventually, there was like a lot of sideways movement, posting some higher lows, until it temporarily went to positive, but quickly turned down again, having a sharp fall again. Okay, so there is some chance of some short-term short positions over here on this return back to the negative territory. On the flip side, yeah, any indication, any move of bars above signal line is a bullish signal that could be either cross-checked with other indicators or wait for any zero crossover signal as well. But it might be too late if you do that. So try to combine it with an indicator just to be certain. Don't worry about being late, Nicole. Anyway, it's been recorded, so you will be able to watch it from the very beginning, and you might already be familiar with MACD, so I'm not quite worried. Let me know if you're not. So let's move on. So okay, we have covered this. So let's see some more examples, let's say. Okay. Actually, before I do that, let me, where's the settings? I will skip. Something like this is a slide that I should have posted way earlier. I put it in the very end of the webinar, but I would like to discuss it a bit today. Have in mind that by default, the settings, okay, actually, let me get to the MT4. Okay, let's do this. By default, okay, guys, by default, you will see these settings for your, oops, by default MACD in MT4 and MT5, and I think in the majority of the platforms, comes like that. The fast exponential moving average is 12, the slow is 26, and the signal line is at 9. But you can amend it, obviously, because these are the default settings, which for some assets in a daily or 4-hour chart, etc., might work just fine, but it doesn't mean that it works for everything and for every single asset or for every single time frame. So you need to cross-check whether it gives you appropriate signals, okay? Appropriate signals, or too late ones or too early ones, and adjust it accordingly. So for example, this is a dollar index daily chart, okay? Okay, so let's, here was the peak of the uptrend that we have seen since December. So, okay, was positive. There were some corrections, but it finally crossed and extended below zero over here, which looks to be a bit late, because that means that the signal came somewhere here. So you see, it was a bit late. Okay, you can tell me, but anyway, you can use trend lines, find a support and resistance level. So even if MACD was delayed a bit, you could see that there was a breakdown of the 1, 2, 3, 4, 5. So of how many months? Nearly a month's support trend line, so that you could be able to see there was a decisive breakout of 1 year support. But nonetheless, it could be interpreted as a bit late one, so you can play a bit with it. So let's have it as 7, 5, 5. Oops, sorry, I did something wrong apparently. Where's my, come on. Where's my, sorry for that, I did something wrong. I deleted it. Indicators. Oh, sorry. I think I deleted it. Okay. MACD. Yeah, so, okay. So let's try 5, 7, 3. I think it's too short, but okay. Yeah, it's for a, no, it's way too short. Da, 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 da. You see, you need to put your cursor on and check how the MACD is moving along with the price chart. So no, that's not a good one. Not definitely not a good one. You can try a 5, a 3. Actually, 10, 16, and 3. Let's see. Okay. Very similar with the default settings. Up, corrections, up, correction, dive, correction, up, down. Okay. I still prefer the default one. Down, okay, like a head and shoulder over here. An incline head and shoulder, the same stands for the MACD. And then it turned down, it crossed it, corrected, and slab again. Okay, that looks to be a much better one. What do you think, guys? Much better one than the default one, because it gave us an alert in advance of the crossing over here. Over here. So it showed this rebound on the trend line, rebound, and then extended down. So actually the breakdown of the latest low, which happened here, actually happened here. Yeah, it was confirmed. Yeah, very close to default. Diana, MACD fast SMA. That's a, what do you mean? What's the question? Sorry, what's the question? What I'm trying to show over here is that you need to play a bit with the parameters, with the settings, until you find what is more appropriate and what it gives you better signals for your asset and for your time frame. So right now I'm in dollar index daily chart, and I amended it a bit from the defaults. I put a 10, 16, 3. If I play a bit with it, as again, let me maybe try something like okay, the default was okay. This looks okay as well. Let me get back to the default. See, yeah, actually the default is just fine as well. So if I zoom in, we could see that it crossed temporarily slightly below zero over here, and then it move up again, and then turn down, and eventually this latest low over here was crossed, was broken somewhere here, which was anyway coinciding with the breakdown of the trend line as well. So default looks just fine for this one as well. But anyway, my point here is that try different settings, okay? Try different settings, unless if the default works just fine for your asset and your time frame. But I know that some of you are scalpers, so you are trading a 30 minutes or 15 minutes chart. So for you guys, obviously the default will not be appropriate. So for example, what do I have over here? I have euro Oz, okay, euro Oz. So if I drag and drop my MACD over here, go down to the 15 minutes chart, I will be able to see that is a bit delay. Yeah, peak over here, down, 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 down. You see, it was a recovery. And let me just let me try the intraday one. 5 3, actually 7 5 3. Okay, what I deleted by mistake. God's sake. 3 5 3. Oh, 3. Okay. Okay, what about this one? What about this one? No, it's a no. It's a no. It's too sharp, too fast, too fast. You see, it peaked already, but the trend didn't breach to its peak. The peak was way after. So no, that's not a good one. This is exactly what I mean. You see, over here, MACD peaked here, but our trend line didn't reach its peak yet. So there was still further steam to the upside. So this is not working for a 50-minute chart. So amend again. 13 minutes chart. So let's try let's try what have I done over here? Have I done it properly? No, good, yes. What do you think? Please judge me. It will always lack a little. It's an indicator anyway, but the best possible, the closest it is, the better for you. What do you think about this one? How it looks like? I agree with you, Paul, but I want firstly someone to let me know what's wrong with it. Looks okay to me. No, Zoran, come on. Why not? No, it doesn't look good. It's way too delayed. It's way too delayed. Why I'm saying that? Because the downtrend started here, okay? But the confirmation that okay, actually it's a bit okay, it's not as awful as I'm saying, okay? I was over reacting, but no, it's a bit late as well. So we have seen better than this. We have seen better than this. They've reached the bottom quite nicely. Yeah, it's a bit late. It's a bit late. It's a bit late. Okay, for the downtrending, it was okay, but look at that. Look at on the uptrend afterwards. It was okay, rising. So missed this dip back to the bottom. Missed that completely. It missed that. Missed that. Start rising and rising and rising and rising sideways, sideways. Again, missed all this sideways line. So that was a bit, yeah, it's a bit late. I mean, the default and the other one that I tried was was the best one so far. So what's Paul suggesting? 10, 15, and 7. Okay. 10, 15, and 7. Let's see. Then rising, bottom here, rising, crossing, rising, 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 bridge to the top, and then start slowing down. Not necessarily bad. Cross below 0 here, extended down. Yeah, actually, it's not that bad. Down, ups, down, down. Yeah, correction. So a bit of a rebound, temporary one. Down, 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 down. Found this floor here and started increasing. Cross positively here, but the signal line was still down, so that's saying that sellers are still in play, adding a ceiling. Okay, down. Yeah, not necessarily bad. Yeah, yes, I agree with you, Paul. Yeah, I agree with it. So we found 3 that work perfectly. The default one, this one, and the 10, 16, which was the very first that I tried, and 3. So these 3, the one that Paul suggested, this one, and the default one looks to work just fine. Yeah, just fine. Yeah, bravo, 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 bravo. So let's move on. Let's get back to the charts. Now let's go in more deep. Oh, sorry. So, okay, let's move on. Remember, I would like to just so what have I missed over here? I think we covered the leadership. Price of us is strong. This is a 4-hour chart. Yeah, so okay guys, so let's move on. Okay, one of the most famous and important indications actually of a possible trend reversal ahead of time is called divergence. So divergence occurs when when the moving averages moves away from each other. I mean, the short, the fast one, and the slow one moves apart. Divergence also is called when our price action moves on the exact opposite direction that what our indicators show. So this is called divergence because it's a very important signal ahead of time that soonish something is changing, that soon we might see a reversal, complete reversal of the trend. So it's an ahead of time alert. So if you spot something like that, you need to put it down and keep monitoring your asset until you figure out and until you confirm this signal ahead of time and eventually enter and take a position to the market. It's not a certain sign. It's a very, very prime indication that the market could reverse. Okay? It's an alert for you to start searching for confirmation, start searching for a possible entry signal in the opposite direction of the trend. Okay, so if we have our indicator moving away, so moving in the exact different direction than the indicator, that's a divergence. So they don't move along, they move on the exact opposite direction. So what you always need to do, always check and identify the direction of your market, of your asset, right, from the price action. Then move down to the indicator and check the direction of the indicator and check whether they move along or not. If they move on the opposite directions, then this indicates a divergence. So actually, I would go straight, I think, to the example. Yeah, I'll go straight to the example. So this is what we say divergence. You see, our asset was posting higher highs, but our indicator was posting lower highs. You see, it's very tricky. It's not something easy because MACD is still positive, remains positive, strongly positive, but it started posting lower highs. If you compare the very first hill and the very last hill, still a lower high, or the first with the second lower high, while on the upside the hills were hills, I mean higher higher high. So we had the price action posting some higher highs, but the MACD, even though it was positive, even though it was way above zero, even though the histogram was kept positive as well, the signal line positive as well, with some intraday or short-term corrections, but still above zero, and etc. We were seeing some kind of a change. That's why I said it's not a certain signal, it's just something to write down, put a note, and keep monitoring it. Because at the very first, with the next bearish signal, with the very next indication that we might have a reversal or by the breakdown of a significant support or resistance level, etc., the confirmation in regards to a new trend will come and you can join the new trend at the most appropriate time possible. Okay, so look at this. As I said, price posting, not only don't compare the very first with the very last one. Compare the second hill, the second swing high with the first one. Still higher highs. So the price action is making higher highs, but the indicator is making lower highs. So, okay, let's put it down. Let's have a look. Let's monitor. We might need to monitor for days. We might need to monitor for weeks. Depends which time frame you have, but nonetheless, yeah. So we have this indication that something is changing. So let's keep monitoring until we have another signal. So over here, I zoom in a bit. You can see that the trend started posting consecutive bearish candles until they eventually broken my previous swing high. And if I connect the lows as well, you will be able to see that it crossed also the trend line that I could have drawn. I need to draw it right now. also the trend line by connecting the lows. Why I cannot draw it? Oops. Sorry guys, just a second. Yes, line. Okay, for some reason it doesn't let me draw, but yeah, if you connect the lows, you will have a trend line like the one that I show on the MT4. Nonetheless, so that either the cross below of the support line, the trend line, or the cross below the latest swing high, that was the confirmation of the divergence, the confirmation that the the rally has stopped and we have a new trend. And if you have spotted this breakdown of the support, you could have benefit this drift for the next few weeks. Actually, this lasted for weeks. So let's break number one. Then the next week it opened below the support and extended lower. So yes, 1, 2, 3, 4, 5, 6, 7 consecutive weeks to the downside. Okay, bearish divergence. So if the price makes higher highs, indicator makes lower lows, this means that the trend is likely to reverse downwards. So you need to wait for another signal to confirm this indication. So if you get this signal either by breaking down a support or a trend line and etc., and if this breakdown of the support is combined with MACD line crossing below signal line, or it might be combined with, I don't know, the price action to break, I don't know, 200-day moving average, or in general, if you combine it with another signal and it agrees, then it's a possible entry time. Okay? You don't necessarily need to wait until the MACD lines cross zero. Okay? That's a possible entry. But everything depends on which indicators you are using. For example, the breakdown of the support over here, it confirmed the reversal. So and the fact that I had consecutive bearish candles with, after the breakout, the following week, the asset opened below my breakdown, the broken support, and posted another low and closed lower again. That was again a confirmation that I can enter short. Okay, so it might be that, it might be move below moving average, it might be RSI, whatever. Okay, so let's move on to the bullish divergence. It's the exact opposite scenario. It's the exact opposite thing. So once your price action makes lower lows, like here it's in a downtrend making lower lows, lower lows, lower lows, but your MACD is acting weird and start appreciating a bit, making higher lows. Okay, that's a bullish divergence signal. So it's the same exact mentality. You can keep monitoring until you have a sign that the asset broke a key resistance level, or it has moved above the previous swing high, or I don't know, it has extended above, broken the trend line that was reacted as a resistance area, and etc. So at the time of, here it's another resistance, broken the resistance over here, the latest swing. So it extended, but the latest swing was here. It broke it and it extended outside the Bollingers and closed outside the Bollingers. So that was a broken resistance, which if you go down and check my MACD, you can see that is combined with MACD bars above signal line. Okay, and not only that, I had also a broken resistance in MACD as well. So I put it a note on my latest swing, and indeed it broken it. So I had a combo of factors: broken resistance in the price action, right? Bars above signal line, and a broken resistance in MACD as well. So that was calling for entry. Okay, at least in the short term. This is a 4-hour chart. So as soon you can tell me, okay, I know that this might not be the very best possible example because the rally ran out of steam quickly, but even you can actually catch up the trade for a while. That's a good thing. Okay, so the peak of the histogram was here, right? And the bar started slowing down below signal line around here. So you could have locked some profits before closing your position. Not an ideal example, but I did my best. These are further this is an S&P 500 to be precise, very long, 4-hour one, okay, which presents 4 different bearish divergences in 2017. Despite the less upside momentum, okay, the asset continue higher because the uptrend was very, very strong, right? But notice how the S&P 500 continue its series of higher highs and higher lows, right? So it continues a nice upwards trend, strong trend for the S&P 500 in a 4-hour chart. But remember, upside momentum is stronger than downside momentum as long as its MACD is positive, right? So indeed, the asset was posting higher highs, higher lows all the time. There were a bit of a corrections, but it kept posting higher and higher and moving higher and higher and higher, posting higher highs. But MACD was keep dropping instead. It was positive, but keep dropping and dropping and dropping and dropping and dropping. So it wasn't moving along with the price. It was on the opposite direction. The momentum was detacting and the positive momentum was decreasing and decreasing and decreasing and decreasing, regardless of the uptrend that we could see in the S&P 500. Right? So remember this, upside momentum is stronger than downside momentum as long as MACD is positive. So its MACD may have been less positive over here, so less strong as the advance extended, but it was still largely positive. Okay? So you could have if okay, you can either in these cases you can either go along with the trend, right, until you have a substantial and a very, very strong signs of a reversal, of a complete reversal, or go against the trend for in every correction, right? So like this one with histogram crossing below signal line, this one which turned temporarily negative, or just adding to your existing positive bullish position. So this kind of swings, this kind of corrections, pullback could help you adding to the particular, to the existing long position. Do you get what I mean? At every pullback, adding to the to your long position. Okay, but a very huge caution, very huge alert. Try to avoid any dramatic moves, such as this one, for example. And dramatic moves of the price, such as this one, they could be presented also in MACD, so we can see MACD having a dramatic decline or increase as well, but that's not an accurate signal. So it means that it's a sign that the asset is at an extreme condition. Okay, it's at an extreme condition. So you need to avoid such a sharp moves, such sharp changes, or at least wait until the market comes down a bit, MACD stabilizes, price stabilizes, and we have all these volatility and all these extreme reaction out of the way. Okay, these are a sign that the asset is overbought or oversold. In this case, it's oversold, and until it gets back to the normal levels, you need to be a bit patient. But as I keep saying, in order to be absolutely sure, combine the analysis with RSI and other technical indicators to identify and confirm these overbought and oversold conditions. So benefits and possible risk for MACD. Benefits, I think you already know them. Trend following tool, work to detect a trend, useful to identify fast if there is a trend or if the trend is weakening, good to identify divergence and reversal possibilities, helps you to hold on your position, something that I mentioned earlier, like all these guys, all these, okay, we were seeing MACD dropping, but it was still positive. And as long as we didn't have any further sign of a reversal, so if you connect your lows or if you check your moving average or your Bollinger, you could see that yes, we had momentum, positive momentum detecting, but these look to be some short-term pullbacks, correction, let's say. So this was helping you to hold your long position regardless of the swing lows or the detected momentum, because the momentum in my was dropping, but it held above zero. So it can help you hold your position. It can help you also add to your position, like we said earlier. Yeah, and it's a combination of two things, trend and momentum. Oscillator with two lines, hence provides more information. Yes, you can add two lines if you want to as well. Possible risk. It will not get you into a trend quickly. Okay, so that's why it needs to be combined. If you want an even faster way to enter the market, spot support and resistance levels, or use RSI, or use MACD, or combine it with another indicator of your preference. It's not useful to set support and resistance levels, so because the prices move quicker than the MACD, so you need to find your support and resistance levels like you used to. Based on the swing highs, swing lows, pivot points, repeated resistances, repeated supports, and etc. Okay. Guys, I'm running out of steam. We are already more than an hour live. So I will leave the bonus for your free time, okay? But that was pretty much it for today. So, yeah. So I have combined, uh, I have combined in the following slides how you can time your exit and trades by combining MACD and Bollingers for a 4-hour one and 15 minutes time frame. So have a look, check them, check whether it helps you. Also, I combine pin bars as well. But I think the examples are quite straightforward for 15 minutes and 4-hour charts, and how to combine these two indicators. I have put on some targets, stop losses, entry points as well, for you to be able to understand when you're going to enter a trade, where you will place your stop loss. It's a strategy basically by combining MACD and Bollinger Bands, and sometimes pin bars as well, because you can see over here we had a pin bar, 3 consecutive pin bars retesting the upper Bollinger. At the same time, MACD was a bit flat, was at 0. Okay, but the fact that we had the pin bars at the edge retesting the upper Bollinger, it was calling for a reversal. Okay, so that was calling for a bearish, for an entry to the downside, for a short entry, with targets being set either at the mid of the mid center of the Bollinger or the bottom line of the Bollinger, and alternatively this will be your stops. Or if you have spotted pin bars here at the bottom of the Bollingers, okay, with MACD turning positive, that's calling for a long position, again with targets at the upper Bollinger or the midline or the previous high, and stop losses few pips below the entry, or alternatively few pips below the lower Bollinger Band. So I have both over here. Have a look, study them, and if you're struggling with anything, just let me know, okay? Good, Nicole. I'm glad. Anyway, your feedback is appreciated. So guys, I'm gonna call it a date. If there are no questions, I will leave it here. Tomorrow we have a live analysis, but it would be good to join via social media because it's easier. But if you want to go to webinar, go to webinar. We're gonna stop actually the live analysis using GoToWebinar from now onwards, so at least from October onwards, because I noticed that live analysis is social media, YouTube, Facebook, LinkedIn, Twitter, etc. It's easier, easy access, no registration, etc. So yeah, from October onwards, we're gonna provide all the live analysis in social media rather than in the GoToWebinar. So for tomorrow, the live analysis is obviously on the US inflation. So it's a bit late, okay, than usual. So I put it at 3 o'clock, so 12 o'clock GMT, okay, 12 o'clock GMT. I don't know where you're placing the word, but that stands for 3 o'clock for for Cyprus, where I am based. So that's 30 minutes before the data release. So we're gonna discuss and see live the US inflation, discuss about the reaction of the market, the reaction of the stocks, the dollar obviously, and etc., and what that means, what the outcome will mean for Fed. So join me, YouTube, Facebook, LinkedIn, Twitter, etc. Yeah, so I'm gonna see you again tomorrow. Have a great day ahead, sorry, and take care. Take care. Thank you, Nicole. Thank you, guys. Bye.